Most traders lose, not because they are dumb, but they simply can't follow the same set of rules on a consistent basis. This one candle removes all of the variables. Just one candle, one time frame, 50 minutes a day of trading, and that's it. And keep in mind, this model has absolutely zero discretion, just a set of rules that we will apply to your trading method to become instantly profitable. And the truth is, one candle is literally all you need. Before we dive into the video, I want to show you guys that I literally journaled every trade that I took and I shared on social media live with you guys. And I calculated my win rate, and if we include break-evens, I have a win rate of 60%, which for me is kinda insane given the circumstances of this year's trading. And some of you guys might be wondering, is this one candlestick pattern the only concept that I really need to become profitable? And the truth is this really all you need? Yes, it is. You don't need more concepts, you don't need more indicators, you simply need to make fewer decisions. Imagine how draining it is to constantly look for 30 different concepts in the trading chart. What all the best traders are doing is simply collecting data of their system like a mad scientist, adding some simple rules around it so they can literally follow their plan on a daily basis. And keep in mind, when I was creating this exact model, I was going to school and working a job at the same time. I did not have a lot of time to spend on the chart. That's exactly why I just made a one candle simple pattern. And the first step, like I said, is we will be looking for one simple candlestick, and the candlestick will always look the same. What you're gonna do is you will go to TradingView and we'll go to all forex pairs, right? This strategy works on all major minor forex pairs. Of course, not like the exotic pairs, just stick to the big ones. Very simple, guys. What you are going to look for is this one super big candlestick on the 4-hour time frame, okay? Keep in mind, 4-hour time frame. Every single time of the model, I will always go for the 4-hour time frame. What we also need is a super small consolidation on a 4-hour, just a couple of candles who are literally doing nothing, and then all of a sudden this enormous candle is everything that I need to see before going further. So again, what you will do, look for the chart and look for this enormous gigantic candle on the chart. Might sound unrealistic, but quick real life example, this is for me a super small consolidation and an enormous big candle, right? Lifetime example of a trade that I took, big candle. What you need to do, super simple, compare the candle size to all the other candles, all right? Super simple, how big is this candle? Not big, not big, not big, not big, not big. All of these candles are small, and then out of nowhere, we get this insane candle, right? It is way bigger than all of the other candles on the left. And what you also can do to make it super simple, guys, again, super simple, see how many candles it takes to create this move, okay? This move takes, well, I don't know, 20 candles, and that exact move happens again in literally 3 candles. 1, 2, 3, we have the same move that took 20 candles. This just shows me that this candle is so strong. And what I just showed you was a prime bearish example. So what can happen? We have a small consolidation and we have this big, enormous, giant candle that I just showed you. Again, this can happen in 2 directions. I want a long, I want a short. I just need to see one type of candle in one direction that is super strong. Now, what is the next step? Once we have this enormous candle, what we will do is we will actually draw a super small area on those candles before. Like I said, I call this my last candle concept. Probably you've seen it in other videos. What you will do is you will mark out the last candle before we have this big push, before we actually start to create this whole push down. That's exactly where I will mark my area. As you can see right here on the bullish side, it will then be right here, for example. So this will then be my area on the bullish side. All right. Makes sense. Let me show you the live example. What did I do here? As you can see, we have all these candles consolidating. What do I do? This is the last candle before we have the big push. I mark out my zone there. Now, next step, I will just wait for price to retrace there. I will wait, okay? I'm not gonna trade anything. I will just literally wait for price to come back into my area and to really touch this gray box. Super simple. This is an important set of the rules. Wait for price to come back into this gray area that you marked out on the last candle before the big push, okay? The next important rule that I have in my model is that price can come back super fast to my area, all right? This is the bearish momentum that we have. This is how bearish we are in the market. We created these three super strong bearish candles, and I don't want price to come back to that area as bullish as how bearish we were. So like I drew it out here like a simple child, I want price to come into my area slowly, exactly like this. I don't want to see the same three candles coming back up again, because this just flips the momentum and shows that we might turn bullish again. Same here as what happened on Euro GBP. I want price to come back into my area slow. You see how many candles it took to actually create these three candles again. This just shows that bearish pressure is still taking over bullish pressure. Next step, what happens when we actually touch that area? This is when we will look for an entry. Right here, we did not touch our gray box, so I was not looking to enter. I know a lot of people were looking, but we did not enter. Super simple set of rules. I will wait for price to hit the gray box, all right? It needs to hit the gray box. Why? Because there is my top of the supply. There is where my big candle starts the complete push. Next, what do I do? Super simple. My entry model is I need to see the exact same model that I just showed you on the 4-hour time frames. I need to see that being formed on a 15 minutes time frame. Super simple. What needs to happen? Again, on the 15 minutes, when we enter our area, let's say this right here is our 4-hour area. What do I like to see? I would like to see some type of consolidation. I would like to see a switch in momentum. For example, we need to create a lot of downwards momentum. We need to shift the bearish momentum and, for example, break some lows that were still in a bullish uptrend. Super simple. Next step, I want price to hit this last candle, this supply, this start of the push again, and this is exactly where I will enter. Let me now show you a live example of what happened on this chart. What you can see here is on a 15 minutes, this gray box is my big 4-hour area, all right? This is where the big push started. As you can see right here, we just started dropping. This is the enormous 4-hour candle. What do I need to see after we touch our area? Super simple. What do I see? This is our bullish trend coming into the area. I want to see price to break some of these lows. That will be interesting. Why? Because this is called a break of structure, and we might actually shift to the downside. And exactly the same thing happened as on a 4-hour. So right here, you could see this as a small consolidation. We just been chopping around here. What happens next? We have all these candles down, all right? So shift the momentum, we actually start being bearish. Candles are getting bigger to the downside, especially this one is super big. What happens next? I will mark out the same area as I did on a 4-hour, but now on the 15 minute. Bam! As you can see right here, this is the last candle before we created this whole push. This is that one candle where I will put my area on, where I will wait for price to come back, and where I will actually take my entry. As you can see, we came back into that area. Oh, that's wrong. We came back into that area. I entered there. My stop loss will be above the last 4-hour high from my area. So in this case, it will be this. Why? Basic market structure. This is your last high before we drop down. So my stop loss above that. My take profit will be my low on the 4-hour or another great 4-hour demand zone in combination with a 3 to 4 risk reward ratio. What can we see if I go back on the 15 minutes? We tapped it. We already moved up, and what happens next is we just start dropping down and we create a new super big push, and this is exactly the complete move that you would like to catch. Bam. Like I said, I literally documented every single position that I took with this strategy this year, and these are my total results. As you can see, I did pretty great for myself. This is calculated with 1% risk. If you do this with 2% risk like I do, you could have made over 50% in all of these months. And like I said before, market conditions weren't great. We had tariffs in the summer with Trump, as you can also see in May and June and July. I did not have the best months just because it really was untradeable. But as you can see later in the year, I literally recovered all of it. And I ended up positive in November, in December, and in September. This is the strategy that works for me, that I have been testing for the last 3 years, that I created myself. I'm super proud of it, that I created this last candle concept. And again, super quick, all you need to do is look for this one big candlestick in the markets. If you want to work with me one-on-one and really master the psychology behind this strategy, which I can't really explain on video and really need to do in one-on-one calls, make sure to click the link below and you can book a free call so I can cover all of your questions regarding the one-on-one mentorship. Thanks for watching as always.